That is the only video you need to understand liquidity in forex and gold trading. I will show you how to identify liquidity zones and their relations to smart money concept. And watch this video until the end, because at the end of this video I will show you how to identify the most significant liquidity zones and how to apply them in trading. Please don't forget to like this video, subscribe to my YouTube channel. And let's start with the theory first. We say that the asset is liquid when it can be bought or sold without significant price fluctuations. Liquidity primarily depends on trading volumes. We say that the liquidity is high when there are a large volume of orders being executed. And the problem is that the liquidity is not always stable. There are some zones where the liquidity is very high, and there are the zones where the liquidity is low. The smart money, the institutional traders seek for liquidity zones because there they can execute their orders with minimal cost. And the best way to identify the liquidity zones is to combine price action and volume analysis. By the way, traders, remember that you can identify the liquidity zones on any time frame. However, the rule is that higher is the time frame, stronger is the liquidity zone. And I always treat the liquidity zones that are on a daily time frame. In order to identify them, first, you should analyze the key levels. You should analyze the areas, the points that were important for the market participants in the past. For example, that high right here. You can see that from that high, a strong bearish movement initiated. And definitely it is a very important structure. And then over here, we have one more very important resistance. And again, strong bearish reaction followed from there. Then over here, we have a very important structure cluster with some multiple bearish reactions from that. We have a strong resistance right here, and we have a very strong support right here. And by the way, if you are wondering how exactly I am drawing the zones, you can see that I consider the wick and the candle close. So if we talk about the resistance, we take the highest candle close and the wick, and if we talk about the support, we take the lowest candle close and the wick. Once you spotted the key structures, your next step is to execute the volume analysis. With the volume analysis, you should analyze how the market was reacting to the key levels that you spotted. And you do that analyzing lower time frames, because there you can see in details what were the volumes after each test of the underlying structure. So on the right chart, we have the same pendulum pair, but on a 4-hour time frame. And here you can see that we also have the volume indicator. And if you're wondering what exactly volume indicator is showing, volume indicator shows the exact volume of transactions. It shows you how many orders were executed. It doesn't show you the strengths of the buyers. It doesn't show you the strengths of the sellers. It simply shows you that the money are changing hands, and it shows you the degree of that. And the main element of the liquidity zone is the high activity, and the high activity can be indicated with the so-called volume spikes. Take a look here, traders. Here is our support that we spotted on a daily, and here in the 4-hour time frame we can see the reaction of the price to that. And approaching that, we can spot right here the significant volume spikes. This volume spikes signify that high level of transactions took place when the market was approaching that zone. So definitely it was a very important liquidity cluster. And we can spot the same pattern among all the structures that we spotted. When the market was approaching them, we got significant volume spikes. And this significant volume spikes show us the activity of big players. They show us that big players were placing their orders there. The money were changing hands. And for that reason, we saw such a high volume of transactions. And of course, the liquidity zones are not equal. Some liquidity zones are more significant than others. And let me show you how to spot the most significant ones. And the most significant liquidity zones will be based on the intersections between multiple key levels. Here we can spot that we have this major falling trend line right here that matches with that horizontal resistance. And the trend line and that horizontal resistance compose here the liquidity zone. The zone based not only on one single horizontal resistance, but also on a major falling trend line. And of course, such a zone will most likely trigger even higher volume activity than just the usual liquidity zone. Take a look at the 4-hour time frame. Do you see that significant volume spike when the market was approaching our liquidity zone? And the thing is, cheaters, that volume spike was the highest among all the liquidity zones that we spotted on a daily. And here is how you apply the liquidity zones. Here on silver, we have also a very significant liquidity zone based on a daily horizontal resistance and the falling trend line. The volumes on a 4-hour time frame also confirm the significance of that liquidity zone. And here, once you spotted such a zone, your main task is to monitor the price action, and you should look for the signs of strength of the buyers or the sellers. And here on silver, analyzing the price action, we can spot that first of all, here we got a rising channel, and you can see that with this bearish candle, the market violated the support of the channel. Also within the channel, the market also formed the double top pattern, classic bearish pattern. So you can see that within that liquidity cluster, we see the signs of strength of the sellers. And that imbalance bearish candle, that strong bearish candle simply shows you that big players are on the bears side. And for that reason, you can easily make a prediction that silver will keep falling and that it will drop lower. Smart money concepts and liquidity zones are closely intertwined. And once you learn to identify the liquidity zones, you will be able to better fill the actions of big players. Let me know, cheaters, in the comment section if you want to see more videos about smart money concepts and liquidity. Also, cheaters, if you want to learn how to trade, do not forget to check my premium group, the link in the description below. Cheaters, please like this video, subscribe to my YouTube channel, and I will see you soon.